On today's episode of the Cryptoverse, hedge funds are reportedly racing to buy Mt Gox creditor claims. TunnelBear is the simple VPN app that makes it easy to browse the web privately and enjoy a more open and secure internet experience. Try TunnelBear for free by checking out the link in the video description below. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 14th of February 2017, so we're going to do the market roundup, we're going to check in on SegWit, and then we're going to get into the news. Now it might sound a little bit different today because I'm recording this sat down. I don't know if you know this or not, but I always record it stood up because I have a greater level of energy. The difference today is that I'm a little bit under the weather, but the show must go on, so I do whatever I have to do to record the episode and make it as good as I can. So that's with that said, let's get into it. Let's take a look at the winners and losers of the day. Big winner today, 13th by market cap, is Waves, has jumped 17.43%. Now that's a decent gain. Now, interestingly, you see here, Waves has one of those asterisks, which we talked about the other day, which means it's not a mineable currency. And the fact that it's got 100 million tokens, well, that sounds like it doesn't have a flexible supply either. That looks like a pretty fixed supply, to be perfectly honest, unless it's a massive coincidence that it just happened to have a perfectly round number. After that 17.43% gain, though, it's left a Waves token at 29 cents. And Waves looks quite nice. You can download the sort of demo wallet. And with Waves, you're going to be able to create your own tokens on the blockchain if you want to issue them for crowdfunding, loyalty tokens, whatever the hell you want, right? That is primarily what Waves is going to do, as far as I know. Now, the biggest loser of the day, down in 18th position by market cap, is Golem. Another bad day for Golem. You know, it's down 10.67%. And Golem also, non-mineable currency, looks like a fixed supply once again. 820 million tokens dead. And like we've said recently, Golem is that rent out your spare computing capacity in exchange for some crypto tokens type platform. So if you're interested in either of those platforms, go to their sites and check them out. A quick chart readings for today then on Bitstamp, courtesy of Bitcoin Wisdom drawing the chart for us. We're looking at the US dollar price in Bitcoin. So this is one Bitcoin to how many dollars? Right at this moment in time, that is $1,014.93, changing by the minute as it always does. Now look at these long tails of the recent candlesticks. Definitely bullish signals. And the low prices are constantly getting rejected. At least after over the last 4 or 5 candles anyway. Not only that, you can see here that the price is struggling to stay under that $1,000 mark. It seems to me that the market's gotten over the idea of being 1,000. It's gotten used to that price and it's kind of become pretty normal. And all that hype around, oh, Bitcoin has hit $1,000. It's kind of old news now, so we can get back to business. I think we got it out of our systems back at the beginning of the year, you know, when we had the spike and crash around the 4th and 5th of January. So now we can get back to normal. Overall, though, looking pretty sideways. I'll stick with that rough penta pattern that I mentioned yesterday. And like with all these larger chart patterns, they eventually result in a breakout. And if the shape is symmetrical, it can break out in either direction. But based on the combination of indicators that I personally use, the overall, it looks like the wind is blowing upwards. A quick stopover on the Litecoin network. You know, you might have seen me do this. It's quite hard not to do this, but I sometimes, when I'm going through a stream of consciousness, I'll mix up the words Litecoin network with Lightning network. And I sometimes have to put corrections in the edit because they're so similar to say. Sometimes I say Lightning when I mean Litecoin. Anyway, this is the Litecoin network, looking to see if SegWit has activated yet. The answer is no, not yet, but we are gaining. We are gaining minor support to the tune today of 6.83%. Now I've plugged that into my tracking spreadsheet here, and I've also set up a few formulas to kind of make a forecast. Now today, that's the highest on record. It's the highest in, when I say on record, in the last sort of week or so that I've been tracking it. 6.83% is the highest we've ever achieved. That's a gain of about 0.79% on yesterday's figure. But then what I've done is I've averaged out the daily gains. So since I started tracking this, it's increasing by 0.76% per day, all right? Now what that means is that if that continues, if that average holds, it means that SegWit is going to activate on the Litecoin network 90 days from today. And now what I'll be able to do now is every time I plug in a new number on a daily basis, my formula is going to recalculate the forecast. So it's going to say at this new average, how many more days left before we activate? So the answer is 90 days from today. If we continue to gain 0.76% per day, SegWit will activate on Litecoin in 90 days. How interesting is that? Contrast that with SegWit on the Bitcoin network. This is courtesy of Coindance. Now Bitcoin has a 24.7% support on SegWit today. That's based on the last week's worth of data. This is also the highest on record according to my data. It's only gained 0.1% support in the last day. And I've done the same thing. The average daily gain here, based on my data, is 0.33% per day. So this number here, 24.7%, it's increasing by 0.33% a day. And when I project that average out, it means that at that rate, if that average holds, SegWit will activate on the Bitcoin network in 211 days. That's quite a long time. Now, I need to look this up. I keep saying this. I need to look up the cutoff point for when SegWit signaling on the Bitcoin network expires, because it has to activate before a certain date. Otherwise, the network formally determines that it has been rejected. So what I need to know is if it did take 211 days, what date would that be? And is that before or after the deadline, right? Because that would tell us whether we're likely to hit it or not. With Litecoin, given that the current projection is 90 days, that's way going to activate before the deadline. So I need to do the same thing for Bitcoin. It's just that Coindance doesn't actually list the deadline, I don't think. Let me just take a quick look here. No, it doesn't. So I'll have to look that up and then include that in the analysis. In terms of the news then, I have turned to CoinDesk. Hey, but you think CoinDesk had died? I haven't covered a story from them for a while now. So check this out. This article is entitled, it's Stan Higgins, good old Stan Higgins. Hedge funds are reportedly racing to buy Mt. Gox creditor claims. So check this out. This happens whenever a new Ferrari comes out. Like professional car traders, they'll place an order and they'll put down a deposit for the new Ferrari, knowing full well that it won't be available for 6 to 12 months. You know, the delivery deadline is 6 to 12 months ahead because they're scarce and they're so popular. Now, as soon as their order is confirmed by Ferrari, the manufacturer, they get their delivery date, and then immediately the professional car dealer starts advertising the car for sale. But they're not advertising the car for sale. What they're advertising is they're selling their place in the queue, right? Or in the line if you're American. And more often than not, these car dealers will be able to get a customer to pay them the deposit, so they get that money back, plus a premium, right? That becomes the dealer's profit. And wealthy car lovers, they are more than happy to do this because by the time that this wealthy car owner figures out that they want this car, they go to their main dealer and the main dealer tells them what they tell everybody else. They say, well, there's a 6 to 12 month waiting list. It takes this long to get one because there's an abundance of orders. And of course, the wealthy car owner doesn't want to wait that long. Fortunately for them, because they have money to burn, they can pay to shorten their wait. And of course, the professional car dealers know this, and so they are effectively touting their place in the queue for a profit. If a wealthy car owner can pay a $10,000 premium and then cut that wait down by 3 months, all the better. And this practice of flipping Ferraris came to mind when I read this headline because it kind of reminds me of what's going on here. So what it says here is that the Financial Times reported this morning that as many as 4 hedge funds are moving to buy claims related to the Japanese-based Bitcoin firm, Mt. Gox, seeking a possible windfall should creditors be made whole. Now, I say this all the time. The investment industry is all based around risk and reward. More specifically, it's just a whole lot of people who want to take less risk, passing assets to people who are willing to take more risk in exchange for a profit. And in this case, the people who are owed the money in the Mt. Gox case, they may or may not get paid. Right? That creates a risk asset that can be bought and then traded. And that's what I think is going on here. It moves on to say the process of unwinding the exchange, which collapsed in early 2014, is likely to drag on for years. Now, does that, or does that not, sound very familiar to this Ferrari story that I told you? The difference here, though, is that the trade is being done in reverse. So the average Joe, who is waiting to get their money back, is facing the possibility of waiting several more years. And they may actually prefer to take, say, 75% of the money now and then just be done with it. So the hedge fund is willing to buy the debt from this average Joe for 75% of the amount, and they're willing to wait until the case resolves and then pocket the extra 25% as profit. That's just a good investment, right? Everybody wins. It also says here that Gox, Mt. Gox, the exchange, once the world's largest Bitcoin exchange by trading volume, collapsed dramatically following months of growing operational problems. Mark Capelles was arrested on suspicion of fabricating volume data, and was later charged with embezzlement. Well, fabricating volume data, don't we know other people that do that? But in terms of embezzlement, the way you could embezzle Bitcoin, if you were an exchange, would be, so like you own funds, client funds on an exchange, right? And you could quietly convert those coins to, say, Monero, and then make some excuse to say, oh, I got hacked and I lost the Bitcoin, right? Now, I can't remember exactly what Mark did to get charged with embezzlement, but I gave you that example just, to illustrate how it works. Actually, I think he did say, oh, we lost all the Bitcoin because we got hacked. And then it was like, well, actually, no, we don't think that happened. We think you transferred it into one of your own private wallets, one of your anonymous wallets. And I think you're swinging the lead there, mate. But again, that's what the court case is about. And it's ongoing. And the article closes by saying the demise of Mt. Gox set the stage for much of the regulatory response to Bitcoin in the years that followed, right? Particularly in Japan, which has moved to bring the country's Bitcoin exchange ecosystem under existing financial statutes. Japanese lawmakers have cited Gox's failure as a key driver in the regulatory push. Now that may be true, however, there is another story out today which makes me think that Bitcoin isn't being that badly held up in Japan. Let me flip over to it for you. According to this article by CryptoCoins News, 3 of the largest banks, mega banks in Japan, have just invested in one of Japan's leading Bitcoin exchanges called Bitflyer. Now, I don't have time to cover this article today, but I will put a link in the sources if you care to check it out for yourself. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.